The Fed finally announced its rate decision and didn't raise rates as we expected. But it didn't pause, it skipped. In other words, it means that we can continue to increase interest rates in July. You know, in the video I published in the YouTube Shorts section, I explained that with the high announcement of core inflation, the Fed will not increase interest rates, but will speak very hawkish. And really, the Fed spoke very hawkish. So, how do we know that the Fed's statements are hawkish? The first described the interest rate decision as a skip. Second, it announced the final interest rate of 5.6%. As you know, the current interest rates are in the range of 5 to 5.25%. This means that they can raise interest rates by at least 25 basis points twice or 50 basis points once. They also stated that they will definitely not cut interest rates this year. Powell stated that interest rate cuts could spread over the years, which was a rather hawkish statement. He explained that they did not give up on their 2% inflation decisions, that headline inflation progressed as expected, but core inflation resisted and the fight against the core would get tougher. All this is in line with the scenario in the short video I explained after inflation report. The market didn't react adequately to these developments yesterday. Sometimes this can happen, the reaction may come on the second day, not on the first day. The crypto market reacted immediately because in part of Powell's statements he mentioned that they could not only increase interest rates, but also go into monetary tightening. You know, crypto is a financial asset that depends on liquidity and the problem grows if the crypto market drops. If I'm not mistaken, Bitcoin fell 3.5% yesterday, altcoins fell even more. Yesterday, I announced that there may be similar decreases in the Nasdaq index together with the crypto market. The Nasdaq was particularly enthusiastic with its AI shares. Nvidia increased its value by $50 billion in a single day. A&B also accompanied the rise. Companies like Microsoft and Apple were also good. Only Tesla fell a little, which is quite normal, since it has already been on the rise for 13 days straight. But let's not be deceived by these rises. Because we have seen before that the markets went up after the Fed's interest rate hike by 75 points, but were inclined to sell the next day. Let's see if the market will believe the Fed. Why am I saying that? Because the market may think that the Fed is making empty threats. There are two reasons for this. The first is the problem of banks. It may be thought that banks will have more problems with interest rate increases. Secondly, it is thought that the US government is heavily indebted and the interest on this debt may increase with interest rate hikes. But Powell was very clear on this. Our country's monetary policy is not sustainable. We shouldn't borrow that much. But this is not my problem, he said. That was a pretty hawkish statement. He added, besides, if there is a deficit here, the Fed will not make up for it. The Fed has no such duty. So what do the markets do next? As far as I can foresee, I expect the reaction in the crypto market to be gradually given to the stock market as well. But as I said before, the real issue is whether the market believes the Fed or not. This will become clear after the inflation data for July. If the core data for July is high again, the direction of the market will be quite negative. That's why I think there will be a very negative volatile market from today to July. Therefore, I predict that it will be more accurate to wait and cash in the upcoming period. Most people do this because, as I mentioned, it is very important whether the Fed will do what it says. It is also quite possible for the Fed to bluff. Because you can manage the market and inflation with expectations. To put things a little simpler, we've been increasing our spending lately, as we all earn on the stock markets. We are all like that. This is called the wealth effect. When people feel wealthy, they tend to spend more. As the stock markets went up, real estate prices started to turn up. Wealth effect is felt immediately and consumption is increasing, which affects inflation. The last thing I will say is this. Despite all this confusion, when I look at the details of core inflation, we see that two issues are problematic. One of them is used car prices. Because in the USA there is still a shortage of vehicles from the era of pandemic. This causes prices to remain high. The second issue is rent. Rents have been down this month, from 0.6% to 0.5%, but that's not enough. When I look at other inflation items, we have come to 0.1 to 0.2% in most of them. That translates to 1.2 to 2.4% annual inflation, and I guess the Fed will eventually consider that. Therefore, I cannot be sure that the Fed will do what it says. But I continue to be cautious as if I will. Yesterday, the crypto market reacted very sharply. But there is no effect on the Nasdaq yet, but please be careful. Also, the rally in companies has come to overbought zones. Can it go further from here? Of course it can, but I see it as more likely that there will be a correction. Because when I look at it with a risk-return focus, I think that the risk is too much for new purchases. As always, I look forward to all your questions and comments. It would be great together. Stay in love. Goodbye. See you later.